formal review for what I've been doing recently that's been making sense and my current trading in general. Really want to be going over the 4-hour PO3 framework that I've kind of been discovering some really key nuances about and how I've been able to use that. But yeah, so to start with, I'll just do a quick brief explanation of what that framework actually is. I'll do it over here. Just over here somewhere. So that'll do. Essentially you have the 4-hour candle, which is going to be open, high, low, close, or vice versa. So let's say this is 2 a.m. and make that bigger. 4-hour open price. And make that solid as well. So we have the 4-hour candle open, and let's say we're expecting it to be open, high, low, close. Then you'll have the next candle open. I'll just draw it out real quick. So let's say we open here, we gyrate a bit below, we raise this, break down, just trying to make it up as I go. Something like that. And yeah, the idea that the 4-hour candle, obviously you want to be selling above the open ideally. However, it's not always going to offer that throughout the whole candle. The reason for that is because we have stages of accumulation, and that's above the opening prices. We have accumulation, and that's always going to be at a premium to whatever the opening that is. So you can see we're accumulating up here, also accumulation of shorts above the open over here, and then this could also be in the next hourly open. So this could be 3 a.m. And this area in here is all at a premium to 3 a.m. This area is all at a premium to 2 a.m. So the 4-hour premium. Either one is a premium, and if you're going short, you ideally want to be going short above that. But while we're accumulating, it'll be above the opening price. When we're now in expansion phase or distribution, so expansion, that's when we now have finished accumulating and we're now expanding towards wherever our destination is. That could be something like a liquidity pool down here. Once we hit a liquidity pool, there's going to be offset distribution, and that's a lot of the time will be below the opening price. So offset distribution, and that's going to be at a deep discount. So I'll put on the rest of the opening prices so you can get an idea. Not to scale, obviously, but trying to give the general idea of what I'm looking at. (5 a.m.) And then we'll have the new 4-hour candle open up on this side. So essentially in here, we have us engineering some premium buy side above the 4-hour open price. We're enticing lower, we're then rating it, accumulating the buy side above these highs at a premium to this opening price, displacing lower. Following that, we have the new hourly candle open. So we engineer a short-term high just before that. we have an aggressive drop lower, and then work our way back up to a premium above this opening price, and even reaching back above the 4 a.m. candle open, the 4 hour candle open, sorry. But once again, at a premium to the hourly open price, and even reaching up to a premium of this, still an accumulation. We then have an aggressive displacement down through the 4 hour open and also down through this hourly open. And then following that, we have this. This is a key signature that I discovered and have been paying attention to, and have already found some really nice A+ trades using just this, which is where we believe that the 4 hour PO3 is now in. So we've got the hourly open, we then have the wick has been put in, displacement through that open, and now I'm anticipating that the 4 hour wick is in and we're going to expand lower. When we reach up towards that opening price but fail to reach it, so even if we reach up to there but fail to reach the opening price and then have a break lower, then that's indicating we're in a expansion phase. And a lot of the time that will result in a very low resistance run lower. So that offers a really nice entry in this kind of area. When we are in a expansion phase and we have a new hourly candle open, a lot of the time it will have a very minimal to no wick. So the 4 a.m. candle will open up, just have a small wick and then expand lower, rather than trading all the way up there. And so if you can recognize when we're in an expansion phase, a lot of the time based on whether or not we hit these opening prices, and you can just kind of tell that we're finished up here, they've trapped longs, they're really heavy now. You can anticipate that there should be very minimal to no wick, and you can get short quite easily here. And then and then catch a really nice low resistance run into sell side. Following that, we have the next hourly candle open, the final hour of this 4 hour candle. At this point, we have already hit a liquidity target, and quite often this will be offset distribution, where we're actually distributing, meaning that we want to be at a discount below the opening price, because smart money wants to be buying down here, because they want to be buying back their short position, and that is best done below the open at a deep discount. So we spend a lot of time down here, and a lot of the time it's a bit more consolidation type of range and range bound. Another key thing to note is when we are in expansion phase and we have a pullback just ahead of the next hourly open, and we are expecting that minimal to no wick such as we see here, then that is the ideal situation for another leg lower. Obviously I didn't draw it with one here, but let's say we had done something like this, maybe even spent a few minutes in this area, and then the next hourly candle opened, then there'd be an even higher probability that it's just going to continue expanding lower right off the bat. After hitting a liquidity area, you can do the same on the way up, and it builds narrative throughout the entire day. And that's what I really like about the 4 hour and the 4 hour PO3, and using that as a framework, and using the hourly PO3 to navigate within the 4 hour, because then you can move on to the daily and think, okay, well, we've got so many 4 hour candles in a daily candle. We have a few 1 hour candles in a 4 hour candle. And then following that, we can quite easily start creating a framework for the entire intraday price action that relates to the higher time frames just based on this. And if we understand that, let's say the daily open is here, so let's say this is the daily opening gap, wrong time frame, but let's say we have the daily open is at this level here. We can then say, okay, we're now at a premium above that open, we're dropping below to a discount, and then we can start really understanding where we are with discount and premium of the range. Another thing this kind of framework gives us is you now can filter out trades by knowing that I'm not going to go short below the 3 a.m. open. I'm going to wait for, I'm going to wait for a premium above that open before looking for a short. Or if you understand the accumulation and expansion and distribution phases, then if you recognize we are in expansion, we're showing these signatures such as this 3 a.m. candle failing to retest, clearly showing that we're in expansion phase, and then 4 a.m. opens and begins dropping lower, and it's just looking really heavy. You can trust that you can sell below the 4 a.m. price and keep on looking to go short. But then if you see us offset distribution down here, and maybe you saw a 4 a.m. open, we never went a tick above the 4 a.m. price, so meaning that from this point here, this entire area, we've been at a discount below the 4 a.m. open, and that supports the idea of offset distribution because we are at a discount. Then when you see that, and then it's followed by a similar situation here where we're consolidating at a deep discount below liquidity and also below the 5 a.m. open, you can really trust that, okay, this is indeed offset distribution and we're likely to reverse and head back up. Another confluence for this is if, let's say, in this area, it starts showing, it's showing this weakness and that we're in expansion, but then after hitting this low and before hitting the target, it has a deep pullback all the way like that, and leaves relatively equal highs. So at this point, you can recognize, okay, well, sure, this was showing me we were in a expansion phase by the fact that we failed to reach this opening price. However, we are now showing signatures of the order flow getting stronger, where we're now disrespecting premiums, overlapping a fair value that's sitting within this range, or leaving these relative equal highs, meaning that if there was an up closer candle here, we're probably disrespecting the midpoint of that and not showing very weak order flow, because weak order flow, you'd want to see a very slight pullback and just an aggressive move lower. So if you have a scenario where we're below the hourly open price, we're expecting offset distribution below sell side pull, and we're leaving signatures on the left side of the curve such as this, and then you see this as well, you can really trust that we are very likely to reverse. And so you can easily get on side on the right side of the curve, or you can even get positioned down here. And then sometimes I've noticed that the next 4 hour candle might end up opening, making a low, and then just ripping. But of course that's not all the time, and this will a lot of the time set up the narrative for the next area. So let's say the 4 hour candle does open there and it does just rip from the open, then that might be setting up something for the future and we'll end up doing something like that. So you can really read the narrative going forward based on what we do in relation to the opens on the various timeframes. And what's so cool about the 4 hour and 1 hour, which is they're the only real ones that I've done this kind of study on. However, I'd imagine that the same relationship can be seen between different timeframes as well. But what I really like is how the 4 hour has a very clear start with the 4 hour open, and it always has a narrative using that 4 hour open price of accumulation and expansion and distribution. And then it kind of resets going into the next candle. There'll be the same thing using the hourly candles, I'm sure, and like the 15-minute candles. I'm just starting my studying using this specifically and have seen a bit of success of it. So I will show this quick example here from today. I didn't trade this today. I was trading gold, but you can see the 4-hour open being 6 a.m. We open up, we immediately drop below that to a discount. So we're at a discount to the 6 a.m. open price already. So 6 a.m. So already at a discount to the 6 a.m. price. 7 a.m. then opens up. We consolidate at a premium above the 7 a.m. open. So accumulating at a premium to this open, however at a discount to this open. But accumulating shorts at a premium, we work our way low. And this is a market maker buy model, obviously. So we want to be buying at a discount for the purpose of going higher. And we've had a nice move higher so far. So being below 6 a.m. open means that smart money can accumulate their net long position. But on the way down, we can also accumulate shorts using this hourly open price. So selling off aggressively. Notice how we failed to retest the 7 a.m. open. Also failed to retest the 6 a.m. open there. So both of these are signatures of weakness. Displacement lower at the news. Consolidating around that 8 a.m. price and then selling off again. Digging down into discount, multiple drives. Took out the previous day low down here. We then have the 9 a.m. open. Notice how the majority of this candle was spent below the 8 a.m. open, so approximately, well, about half of it, but still a fair bit. Actually, no, all of it, sorry, that's the low, but this is the 9 a.m. open. So majority of the 8 a.m. candle spent at a deep discount. The entirety of the 6 a.m. candle spent at a deep discount. And we've already hit sell side. We have the 3 drives below sell side. 9 a.m. opens, has a quick wick low, taking out a short-term low, and immediately gets a lot of strength upwards. You can see that we'd be leaving breakaway gaps in this area because it's all quite nicely balanced with this consolidation within this range. And then it starts showing strength, just working its way higher. So at this point you can see, okay, we are really strong. We've spent the entirety of the time below the 6 a.m. open, so we're clearly at a discount this whole time. Working our way higher, and throughout here leaving no inefficiencies, taking out short-term lows consistently, and not looking like it needs to retrace at all. We then have a pullback ahead of the 10 a.m. open. So prior to the 10 a.m. open, we are already pulling back, creating this false high. Then we get the 10 a.m. open, takes out a short-term low, and we get this strong push higher, showing that the next 4-hour candle is going to be a distribution 4-hour candle and into this buy side. And that's, I suppose, beginning to relate the 4-hour to the daily time frame and the daily candle expectation of how it's going to form. So it's kind of like a crossover, but yeah, you can see that we had no willingness to go lower. We clearly were making a strong push higher. We had the signatures you'd expect for expansion. And so you can see I put a little green arrow here. This would have been an ideal place to buy right there. Yeah, and then hitting this buy side, you can see that we start slowing down, having these drives higher. And now at this point, it's 11. We have been spending the majority of the time at a premium to these opening prices and above buy side. So this can be offset distribution of the morning's longs, and also potentially engineering these lows and this low, I'd imagine, as a place for sell side to accumulate, to build up below. And as we consolidate to a premium, while retail buys into premium, then smart money will want to buy the sell side down here at a discount relative to, let's say, the 2 p.m. open, which might be here. Drops down to a discount, takes this out, and then rallies. It's just an idea of going forwards, but that's the general idea. I'll quickly go over this scenario over here from yesterday, which is the trades that I actually caught and worked out beautifully. This is quite messy looking, I know. I'll Hold up, I'll open up a different chart. So here we are on a different chart. I actually marked this up yesterday, so it is. So it's still marked up. Don't know if that's readable, or I should just delete all this and just show you again. You can see I've written some things out, the frameworks, the narrative and everything, but I'll walk through that myself. If I can hide all this. Don't need any of this really. I'll just leave the key things on. That will do. So super obvious cell size sitting down here. What really stood out to me about this is really on the hourly chart. You can just see if you were here in the morning and you're sitting in this area, this looks like a really bad place to buy. Below this sell side just looks bad. Sure, this is high resistance, but that's just such an obvious sell side pull after Friday has this enticing rally. Monday engineers a really obvious low, so trailed stops are going to accumulate down there. On top of that, it is at a premium, and we never reach the discount. We then have this failure swing overnight and displacement lower, so showing heaviness, no need to retrace deeply into the range. So I was expecting heaviness, and then the thing that really made it super clean is if we look at SMT, we have SMT with the midnight liquidity pool, which is a really clear key level to have SMT with. So I was looking for shorts. I won't go over exactly how I traded it. I did get in too early a few times, but ended up catching a nice short. So we have the start off. We have that's 4 a.m., 5 a.m. So both of those were just kind of a original consolidation, but I'll get into that later. We then have 6 a.m. opening here. So this is the 6 a.m. open price. I'll put a nice long line on it. So that's the 4-hour open. Straight away from the 4-hour open, we engineer a premium high. We then drift lower, consolidate for a long time, all the way until just before 7 a.m. We start rallying up. So now we're at a premium above the 6 a.m. open, the 4-hour open, accumulating this premium buy side and turn range. Spend a whole bunch of time at a premium. Also at 7 a.m. opens here. This entire time we're at a premium above 7 a.m. and also at a premium above 6 a.m. We then have a break lower, climb back up to a premium once again, and then this time when we break lower, this is the really key signature. We have this displacement through the 7 a.m. open price, but a failure to retest it. It is also after 7:30, so you'd expect the PO3 wick to be in for that hourly candle. Failure to retest, showing a lot of weakness, and this was where I was able to get in with the position that actually worked nicely. And then that results in a nice push lower, really nice low resistance run after hitting ERL. So I'm zooming around a lot, I know, but it'd be easier to read on the 2 minute actually, but I just got the 2 minute. There we go. So after failing to retest the 7 a.m. open, displace lower, climb back from ERL to IRL at this premium internal range, offering another short, also getting back above that 6 a.m. opening price, and that's offered another premium to the 6 a.m. open. We're expecting, because of the signature here, where we failed to retest the 7 a.m. open, so that's the signature. We then have the next hourly candle opening right here at 8 a.m. So 8 a.m. open is right here. We're expecting expansion, so very minimal wick and expansion low. As you can see here on the hourly time frame, we can see the manipulations happened on the 4-hour candle. We then failed to retest the opening price that did the manipulation, and I think that is something as well. The actual hourly open that does the raid, when we fall short of that, that's really key. And yeah, just expecting the 8 a.m. candle to drop. So I was able to sell right here, not expecting us to go very high. And because the whole basis for that hypothesis of the 8 a.m. candle expanding lower with minimal wick was the fact we hadn't hit this opening price, that means that I could easily put my stop loss up at this 7 a.m. open and trust that it won't go there if this is in fact expansion. Also had this nice trend line that we obliterated, which is very nice to see. And yeah, 9 a.m. once again accumulating above that hourly opening price, and then eventually reaching back up towards the 6 a.m. open. Yeah, and then you can see the offset distribution down below the opens over here. Also this accumulating, engineering sell side and then allowing people to get long as we consolidate as a premium. Then we have so all this is premium. Retail is buying at a premium in this area. Discount sell side is building up below this low. It's all discount sell side down here. We then have the 2 p.m. open up. So that's a new 4-hour candle. It immediately drops to a discount below the 2 p.m. open and drops to all this ultra discount sell side sitting down here to a previous area of accumulation within this order block. So all this was at a discount as well. So they're accumulating down here. An order block is a previous area of accumulation, and they accumulated in this area. So dropping down to a discount below the 2 p.m. price, below the 3 p.m. price, ultra deep discount, accumulating down here, climbing back up, enticing longs multiple times, just tapping into that 4-hour open, then dropping down once more to this deep discount, previous area of accumulation. We then have a bunch of time spent in there, and the new day opens. So you can really read that we're accumulating down here. And another thing I really noticed, and this I'll show you even cleaner example soon, that when we have two hourly opens, such as that one there and this one here, that are at the exact same price or very close, that a lot of the time represents a original consolidation, and that's exactly what we see here. We have an original consolidation of these two opening prices. We then rally to a premium, spend a bunch of time up here, then drop down to deep discounts. The new 4-hour candle opens, raids the sell side, and reverses. We have the same thing here, two opening prices at the exact same price, rallying to a premium, then selling off. The same thing up here. This is the overnight consolidation, relatively the same prices. And here we go into today, where we have us opening the 2 a.m. candle and then spending the majority of the 2 a.m. candle at a discount, and the same with the 6 a.m. candle, and getting this really nice reversal. So you can really kind of read that. And when you think about it, with this observation of two opening prices being the same price, being the original consolidation, you can now see it here, where we have these smooth candle bodies with this candle open and this candle open, not that one, but these two candle opens at exactly the same price, and that becoming a really nice draw over here that we attacked. It could be a really nice target to reach for. But if we scroll across, and I'll have to replay back to a bit closer. Here we are. So you can see it's the same kind of thing here, where we have multiple hourly candle opens at the exact same price. They're not right next to each other. That's the only difference here. So maybe this is more in a high time frame, which makes sense because it was. But then over here as well, two hourly candle opens, same price, drops to a discount, reverses, rallies up. So yeah, that's the general idea. I'll show some nice examples from goals now. I'll stay on this particular thing, however. I'll show the one from Friday, which just worked really nicely. So I'll replay over here somewhere. So on Friday, we have the, excuse all this, I'll just delete it. So we have the 6 a.m. open down here. And what do we do straight away? We rally to a premium above the 6 a.m. open. So this is the 4-hour opening price. I'll make that white for consistency. Well, to start with, we open this 5 a.m. candle and we're straight away at a discount to it. That results in a reversal back up. But what that also does, it means that retail is selling at a discount, engineering premium buy-side liquidity. We run up, now we're at a premium to the 6 a.m. open price, and we're at premium internal range liquidity. So smart money is accumulating a short position above this price. We then drop lower, rally up, going ahead of the 7 a.m. open. 7 a.m. goes straight to a premium above the 7 a.m. open price and above the 6 a.m. open price. Spends time up there, trapping longs at a premium. And you can really see that it's like the time we spent up here after this big rally gets everyone in long. We then drop aggressively lower, consolidate a bunch, but then this is the key. We fail to retest the 7 a.m. open, and that's showing weakness. We then break lower here, and this is the perfect place to be getting short. And when we get that continuation lower, you can understand that, okay, this is really showing weakness. We failed to retest the 7 a.m. open. We're now in the expansion phase of this 4-hour candle. So we begin, and I'll even draw the body onto the candle just that we can visualize it even better. So that's the open, trade up like that, trade down, up, etc. And we end up closing the candle here. So it's a down closing candle, but it did reach all the way down to here at one point. So quite the candle. And what's interesting about this is how we can anticipate this 8 a.m. candle to be an expansion candle based on the facts that the 4-hour wick is in because of the signature that we failed to retest the 7 a.m. open. So when we have this pullback ahead of the 8 a.m. open, we can anticipate a minimal to no wick and expansion lower. So as soon as we get up into this internal range, we can go short here. This is also at a short-term premium, but we could go short in here or even go short right here. And this is where this could get really cool. If we can correctly predict this, what if we know that, okay, now we've got the minimal wick in on the 8 a.m. candle. I know the 8 a.m. high isn't unlikely to get taken out now. And then all of a sudden you can get these ultra high risk reward setups. If you can find one that just makes a lot of sense and you can really see the narrative behind what we're doing, which in this scenario there was, based on the narrative in the high time frame with the drawn liquidity and the facts that we were enticing longs with long wicks throughout this area. So we are likely to remain heavy below this mitigation block. And yeah, so then once again we have expecting heaviness and expansion, but what happens here? Well, we begin to be heavy, but then we have this super deep pullback, leave smooth highs, relative equal highs, really deep pullback, and then keep on going lower. So the facts that we did this is indicating that, okay, order flow is beginning to strengthen, and we're likely to turn around at some point. And then, but we continue to go lower. You'll also notice how we have the 8 a.m. open. We are at a discount to that 8 a.m. open throughout the entirety of the candle. So it's showing you that, okay, we're likely an offset distribution. We also had a weekly wick midpoint over here, roughly this area. So reaching into that discount PD array. We are still haven't quite reached that objective yet. We are clearly in expansion within this candle. So this 9 AM opening price, again, minimal to no wick, and expansion towards that draw. We then have 3 drives into the sell side, a reversal at exactly 9:30, and it offered a nice post XX30 entry model here, which is where when we have clear order flow direction post halfway into the hourly candle, then you expect that the wick is actually in and we'd like to expand. We spent the entire time at a discount below the 9 AM open, had the 3 drives, having the displacement higher. From this key area, we've been in offset distribution since the 8 AM candle, and so you can trust that we're going to rip back up, eventually reaching back above that 8 AM price all the way over here before reversing. And then you can see the same thing here where we have the 10 AM open. We then spend the majority of time below the 10 AM open and then end up rallying higher. We then have a lot of time spent above the 11, above the 12, and then with the 1300 we entice shorts, then raid premium buy side above the hourly open price before dropping lower. The next 4-hour candle open. Next 4-hour candle, do we ever go a tick above the 2 PM opening price? No, we don't. I believe we did at the Sunday open, just prior to this candle. It just doesn't show it with this broker. But yeah, at a discount to that price, we then sell off and reverse back up. But it really shows you how this plays out. And then I think a similar kind of thing happened here. We've got the 1900 price, then 20. So reverse, we have a impulse low down here. We at a premium above that 1900 price while they entice retail to buy. Engineering discount sell side below this low. We then have 2000, once again straight to a premium. You don't want to be buying up here. We drop down. Then we have 1, 2, 3 drives below the sell side, and 2100 drops down below the open price, deep discount below all these opening prices, below this discount sell side, and then rallies up. And now at this point you can see, okay, well from this 4-hour candle, we've been accumulating below the hourly open. I think the 4-hour open was about here, using the actual feeds that shows the actual Sunday open. But then you can see, okay, new 4-hour candle open, and it just rips. And how you can anticipate that is just the facts that we have clearly been accumulating ever since this 2 PM open. This entire time we've been at a deep discount. Once again, all this time here was below, make it a bit stronger, all this was below the 4-hour candle open from 1800, also below the daily candle open. So we've been accumulating down here. After accumulating down here, we are ready for expansion. The new 4-hour candle opens and it just expands instantly, resulting in a very nice long run. You can also see how we fail to retest that 4-hour candle open, fail to retest, and that results in a nice run high. So yeah, it really gives you a good narrative. And just another example, we've now hit all this buy set up here. What do we expect if we bought down here? We're likely to offset distribute up there. So we spend the time at a premium above the 1 AM price, above the 2 AM price, above 3 AM, and above 4 AM at a premium. We then fail to retest the 4 AM open price. We have 5 AM open. Is it likely to make a long wick up here? Or is it likely to expand lower? So that's the general idea. And it's just makes a lot of sense. I need to backtest it more, actually using bar replay, because I go to trade it like I did today, and what ends up happening is I fade it. So today there's a really nice example, if I even know what I'm looking at. Here we go. So we have the 2 a.m. open. What do we do at the 2 a.m. open? We instantly drop to a discount. 3 a.m. open, we drop to a discount. Down here, I didn't trust the longs for some reason. I thought it could be a long, but I also thought it could be a short. Despite it being super obvious, we've got the two opening prices up here, midnight and 1 a.m, exactly equal, being the original consolidation. We're then at a discount below the 2 a.m. open, a discount below the 3 a.m. open. Have this rally up, engineer a pull, entice longs to a premium above the 4 a.m. hourly open, then sell off down to turtle soup, the sell side pull at a discount below this hourly open, and at the change in state of delivery on the hourly chart. 5 a.m. is now ready to expand higher, so expansion, and then new 4 hourly candle open here. The same thing here. 9 a.m. opens instantly to a discount. 10 a.m. most of the time at a discount, eventually displacing higher, failing to retest. Discount below the 11 a.m. price. 12 a.m. expands back up to that 9 a.m. open. So it makes a lot of sense, and it allows me to navigate the intraday a lot better, and also filter out trades, such as I shouldn't have been going short down here. I was going long in here, which didn't work. However, then that was made up for by this long. But it allows you to filter out trades, not being buying above the 8 a.m. open, or selling below the 7 a.m. open. So, and then when you see that we've done this scenario where we're dropping lower, and then drop lower here, you can really trust buying down here at the 4-hour CSD. You can really see accumulation, distribution, and it builds the narrative of the day incredibly well. So that's what I've been looking at. I need to backtest it more and actually just use bar replay and get confidence with not fading it, because like I was long in here. I got taken out right at the low. Sure, we're making relative equal lows, and I was so tempted to just go short here, thinking, you know what, it's probably just going to pull up IOFD and sell off. But then I recognized, wait a second, we've been at below 9 a.m. open. We're now below the 10 a.m. open. The last thing you want to be doing is going short down here. And sure enough, it rips up. I also got long in this area. I closed it out at the highs, just because I've not been trading well today or this week. I'm not going to lie. But it's cool to see it play out exactly again. Accumulating below the hourly open, ripping. We're now at a premium above the 12 open. So am I going to buy here? No, I'm not. Even though it could very well expand higher. But so far we've spent the majority of the time above the 10 a.m. open. And although I am expecting higher prices in general, it just filters this trade out for me. That would have been a perfect terminus right there. And you'd be happy with that. So yeah, I need to really go over the stuff and get confident and comfortable just trading this model. If you look at my executions from this past week, there's hundreds of them, and they're all like arrows everywhere. Zero conviction essentially, and I'm not trading one model. If I'm to trade one model, it would look like exactly this, reading the narrative on the candles and exactly what's happening. We're accumulating below the open and looking for entries in alignment with what the PO3 narrative is actually telling me. And that would allow me to actually capture high probability trades and also have confidence to hold trades. Such as if I bought down here, which I did, I should now have the confidence to hold up to the 9 a.m. open. That's the general idea. Engineering this premium buy side, enticing shorts, spending the time at a discount below the open. So retail is selling at a discount, then open, rally to a premium above the 8 a.m. open, and then to a premium above all the spices up here. So deep premium, sell off again. We open up, trap longs, aggressive sell off, failure to retest hourly open, breaks lower, continues pushing lower. And then at this point we're distributing a deep discount and also opening the new 4-hour candle. So accumulating below the 4-hour candle open, and then rallying to a premium, original consolidation with these two opening prices, new 4-hour candle opens up, drops to a discount below that hourly candle open, and to take out the previous 4-hour candle low in order to accumulate at a discount below the open, then reaccumulate at a discount below these opening prices, and then expand on this candle after we'd already accumulated, showing that we're in expansion phase and we're likely to have minimal to no work, which even going into this new 4-hour candle open was the case. Minimal to no work, and then it rips higher. But I haven't really tested exactly how the new 4-hour candle affects the narrative of the previous 4-hour that was in play. But yeah, you can see that I feel like the way I've explained it here, there really is something to it. And it really can just help me navigate the intraday a lot better. And then, yeah, and say I had over here somewhere, there was a 2 hourly open prices that were pretty similar, like that, or even more, then I could have very high conviction we're likely to hit up to here. And then that's your textbook market maker model, original consolidation. And then it could be even something like this, where we have, so an original consolidation up here on a different time frame. Maybe it could be daily opening prices or something, which really brings you to like the new day opening gaps, new week opening gaps, and why they become good targets. So if we have a consolidation up here on whatever time frame, we then sold off, and then at this point we're climbing back up, and then we fall short of this obvious buy side draw. Let's say it's an old high. And then there could be something like this. We could have sells off, we then have we pull up, we know that we're going here, however it falls short, it drops back down to an area of previous accumulation, such as down here, and then this is the reaccumulation model, where we fall short of a draw, pull back to an area of old accumulation, which could be this, and then takes out some sell side, reaccumulates, and then we can trust that we're likely to rip up to here because we have this lower time frame market maker sell model in here with first stage, second stage, like that, and then ripping up. So you can really start to frame everything just based on that and based on the daily candle open, and then you could have the weekly candle open up here and know that we're accumulating a discount below that, I feel like that's a really good way to actually be able to navigate the intraday and get a narrative for every single hourly candle and how that relates to the higher time frame. So if we're consolidating above the daily candle open, this possibly isn't the buy at 2 a.m. for a long. But you could anticipate, okay, maybe this is the short to head to a discount sell side to then accumulate below the daily candle open and then rip. And then we also have the exact same concept that I'm talking about here with the hourly candle open. Was taught by ICT as well about the new day and new week opening gaps, where he says when we fail to retest them, that's indicating that we're extremely strong or extremely weak. And that could be the exact same scenario here. Consolidating around that opening price, failing to reach back to it, the same as we failed to reach back to this price here, during second stage reaccumulation or just distributing up into these buy side pools, and then failing to retest, that being even more confirmation that we are indeed super strong. And then maybe we have a new 4-hour candle open right here, let's say, and we've just seen this signature where we failed to retest the daily candle open, and we know that we've got this target up here. We've already had a market maker model with reaccumulation, and we're showing other signatures on the low time frame that show extreme strength, such as this breakaway and other signatures. And then you can go, okay, well, this 4-hour candle is likely to have very, very minimal to no work and just rip. So when we climb above these highs, create an order block, you can be like, cool, I'm just going to buy right here. Even though we're hitting buy side, all the signatures are telling me that this daily candle has now opened, traded higher, traded lower, and now is ready to expand and rip. And so you can buy here knowing that, okay, it's failed to retest this, it's going to rip. And using that logic, even if you for some reason want to trade using the higher time frame, you could see this as, all right, well, we failed to retest that. That is the whole basis, the framework I'm using for my logic of entering long here. Oh, this is not ideal. Let's see if I can do this a bit better. I zoomed in too much. But yeah, if that was my whole thesis for why I entered on this 4-hour candle open, thinking that we'd push up to this original consolidation, then invalidation can just be that opening price. The same way that on the short side, I'm just going to, I'll just use a box. If I was to enter here, short, due to the fact that we failed to retest the 3 AM open, I can just put a stop loss right there, like so. Trusting that, okay, the whole reason is because we didn't retest that, and so it should remain super heavy. Then obviously I can use low time frame arrays as well, but that's just an idea. So that about sums up what I've been looking at and what I've been doing. I just need to backtest it more. I only really had the weekend to backtest, and I had a really good backtesting session. However, I need more practice seeing it and trusting that that's all I need to execute on. I don't need to put 100 arrows here, 100 arrows here, 100 arrows here, trying to go short below the opening price, and then, messing it up like that. Like, I just need to be super patient, and when the setup shows, I can see it. It's really obvious, and if I have more practice, I will be able to fully trust it. So that'll do.